What's up everyone, welcome back to another video where I will be explaining the different forms of orders that we have in trading. We have market order, limit order and stop orders. We're going to go over them, explain them and then also see how we can use them in the best way possible. So my name is Oscar Madison, I'm a funnel trader as well as a personal trading coach, and with these videos I'm trying to get you guys all the knowledge that you need to know in order to become a profitable trader. So let's begin the video. With this, I'm going to be explaining the market execution, a limit order and a stop order. So market execution is one of the most simplest forms of orders. It's basically just buying or selling at the moment you press the button. So press on buy or sell, and where price is at that current time on the market, that's just when you buy or sell. Now then we have a limit order and a stop order. So limit order is when you expect to reverse. So let's write that down. Limit order is for reversing and stop order is for continuation. So now that we know that limit orders are for reversing, now how does it actually work? So basically, if we move down lower and we then move up higher, that's a reversing, right? Then we are reversing in towards the upside. So how do we use the limit order? Well, when you have a point you want to trade long from, so let's just say you wanted to trade up higher in towards the highs from this demand zone. So this demand zone you expect to tap and then trade up higher from, okay? Then what do? You have your limit order on top of that demand, and what then happens is once you enter or once you get on that order or on that level of price action, you then buy the market and you trade up higher. So let's now say that you have a limit order over here. Then what happens? Well, if you enter that limit order, you then sell the market, so you then short. So I hope that's clear, that limit orders is used in order to reverse towards the different direction. Then we have the stop orders. So we already explained what market execution is and what the limit orders is, and then we have stop orders. So stop orders are for continuation. So when the limit order, now we're talking about limit order, is under the current price action, we're buying it up higher. But with a stop order, we are selling at that moment in time. So then we could sell, or then we expect to sell, okay? So let's say this is our fractal high. We have our stop order above this, right? Then once we trade through it, we enter immediately in a buy position. So then we just expect to trade up higher, yeah? Whether if this was a limit order, when we trade through it, we then sell, so then we would want to trade down lower. So I hope you now see the difference between market execution, limit order and stop order. Now let's talk about how you can use it to your advantage. Okay, so first let's talk about market execution and how you can use it to your advantage. So what we can see here on the chart is that I wanted to go long from this price action, but I didn't see any confirmation, no confirmation at all. But the fundamentals were telling me, well, okay, we're super bullish fundamentally, but what have we been doing? Just continuing down lower and lower and lower. So in my opinion, because the fundamentals were bullish, I was just expecting a move up higher, ending this channel, right? So what I did is, once we were over here, I just market execution. I just bought at that exact moment in time when I thought, okay, fundamentals are bullish, we are kind of having a correction price action in towards the downside, I think we could move up higher soon. So that's how you can use the market execution in your advantage. But with limit orders and stop orders, there's more to the game on how you can actually use it to your advantage and when you need to use what order. Let's take a look at some other examples. So let's look at this limit order that I had on UZ Swiss. This is one of the different cases how you can use a limit order. So we're going to go over this one and the other example of how you can use a limit order to your advantage. First of all, the first thing how you can use a limit order is when you see a point where it could reverse from. So basically, what did I see? I saw one low and a second one. So I saw two equal lows. What did I do? I place my limit order on top of this liquidity. So let's just go back with replay mode. And what did I do here? At this moment in time, I placed my limit order on top of the liquidity. Now, as you might know, once we take that liquidity, we trigger the limit order and we buy the market because we reverse. Okay, so that's exactly what I did. Yeah, so that's the first thing, how you can use limit orders. Then how can you also use it is with confirmation. So as you might know or not, we use fractals as our confirmation to trade up higher. So what did we have over here? Well, let's just call it bullish order flow, but let's just say that after this fractal break you wanted to trade up higher. I don't know if this is good or bad, this is just an example for this video. But let's just say after this fractal break you wanted to trade up higher. So then what do? You place your limit on top of the fractal. So let's just see, right? This is now your demand zone, okay? Because once you break the fractal high, you then create a demand zone where you could trade up higher from, correct? So once you break the fractal and you're now over here, you can place your limit order on top of the demand, stop just underneath or wherever you want it to be, and then you can trade up higher, trading for just up higher, right? So then what you can see is that we would have missed the trade here, right? So we would have not been in the trade, just shot up higher. Okay, why is that? Because our limit order was over here, so we needed to see a tap in towards this before we could move up higher, because then we would have been entered on the trade. So with market execution, for example, over here, we would have catched the move, right? That's the thing with market execution. But with limit orders, when we had a limit order over here, let's just say we got triggered, we could have catched more pips, or we could have catched a better entry. So that's when you use limit orders, stop orders, and market execution. So then let's see what a stop order could do and how we can use it to our advantage. So a stop order is also mostly used when we get fractal breaks. So let's go back a little bit towards this price action. So let's just say, right, we want to trade up higher, and we see that this is our fractal high, and after this fractal we want to trade up higher. So what you then do is, before you break that fractal high, you place your stop order on top of that high, and what then happens is, once you break the fractal, you then automatically enter the trade, and you do not need to wait for a pullback before trading up higher like you need to do with a limit order. Now, why do you need to wait for a pullback with a limit order? Well, because it's a reversing. That's how we use a limit order, to reverse, right? So when you use the stop order, you just can move like this and you are inside the trade. When you break the fractal, you then want to place your limit order and you just shoot up higher. We just have seen, we then miss the trade. But with a stop order, you can just move up higher, and over here you automatically already buy the trade. So now let's just say, what if we had a limit order over here? We would reverse. I hope it's clear how you can use, or what a limit order and stop order is, and that you can use it in different forms in order to gain advantage in the market and gain the best trades. So again, quick little summary: market execution, just executing at the point where market is at that moment in time, used for just being in the market so you do not get any front runs, so that price cannot move away without hitting your limit order and just move before you can even enter on the trade. So then we have limit orders, and this is used for a perfect entry, such as over here on top of that liquidity. You wanted a perfect entry on top of that liquidity, so you place your limit order on top of that liquidity. And it's also used after a fractal break, because then you get confirmation, and you place your limit order on top of the demand, and you can then trade up higher, but you will need for retracement in towards your order before moving up higher. Then we have the stop order. So the stop order is used in order to do not get any front runs. So if you want to see price trade up higher, you place a stop order at a point where you think, okay, now we have the fractal break, for example, and at that moment I want to trade up higher. So before we have the fractal break, you place your stop order at the fractal. Boom, you break the fractal, you're fractal bullish, and you can just already continue higher because you're already in the trade. So that way you also cannot have any front runs with stop orders. So I hope you now know every little form and how you can use it, and see you guys in the next one. Thank you for listening and see you guys. Bye.